Welcome to the October 18th, 2021 Advance Report from McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, with your fast-paced weekly tour of the global financial markets. I'm also president of McGowanGroup Asset Management, a team of 10 dedicated to serving affluent families right here in North Texas. Be sure to set your time for a Zoom meeting or to come down to the Crescent and meet the team that cares. This week, we're going to start again with the Dow Jones Industrial Average year-to-date observations there. At the end of the week, the Dow spiked over 35,200. That was about 400 points away from the record, similar to this level that was first reached back at the beginning of May. So it's essentially a sideways 6 months or so in the markets. I want to cover some money flows that are important, and they're very important for investment strategy. So this is Bitcoin. Now, Congress, in their infinite wisdom, pulled a wily coyote move, and it blew up in their face. Of course, the Fed doesn't like crypto. It's a competition for the dollar. They said in their tax bill, the legislation that hasn't been passed yet, that they want the IRS to get access to every transaction that you do over $600. And, of course, it blew up in their face. Cryptocurrency is now back to about $2.4 trillion in aggregate value. Bitcoin itself trading just below 60,000 at the end of the week. So that was not the intended move, and Congress is now regretting their decision there. Natural gas is exploding, $6.46. That was a 7-year high. There is a relationship between natural gas and electricity that is very direct. Rising electricity costs, rising natural gas costs are going to be a huge theme for 2022. One of the reasons, if you're not drilling new wells, you're not getting an abundant supply of excess natural gas. With the exportation, liquid natural gas from the United States projected to double again here over the next 10 years, you are looking at potential prices near $10 per million BTUs, according to some sources. This is the price of electricity, correspondingly an all-time high for residential, and a lot of the commercial locks in their price, but you can see it also is at or near an all-time high. That's actually going to get worse based on what we're seeing. And this is the first time that the global financial media has used the term global energy crisis. You just don't have enough to go green right now. And the renewables started to rally this week as well, because when natural gas is more expensive, electricity is more expensive, solar has become very economical, and of course we're BTU agnostic. We want great companies that innovate, provide clean energy, both the traditional oil and gas and the pipelines, and of course the renewables. They had a whole hiatus this year after a big rally last year, but that's reversed with the cost going up. Now, here we've got crude oil, $82 a barrel for the first time in this cycle. And what that tells you is that crude oil is capable of making all-time new highs over the next few years if this is indeed an oil supercycle. This is the 20-year chart. 147.27 was the high on this chart back just before 2008. And, of course, some people would blame part of the recession on that. Of course, there were other reasons that the banking system was in trouble. But in this case, you're back to $80. That is the highest since the shale revolution oversupplied the global market. The inflation-adjusted equivalent here is similar to Kyle Bass's mention that oil could hit 200. If you adjust the 147 for inflation, you're close to it. That would be a super cycle, and based upon the lack of investment in new supply, it's not out of the question. Now, this tells you something else. This is the rig count. How many active rigs are actually out there looking for oil or creating the new oil? Well, 533 rigs is actually below the year 2000. And the economy's grown quite a bit over the last 20 years, and global energy demand has too. And that tells you that you are in for a very expensive winter, both at the gas pump and the light bill. We want to be a beneficiary of that cycle, and that's why I brought up energy to say, wow, this could be a great opportunity for the whole energy sector, and it's already been called the trade of the year because it's done better than the other categories. Now, healthcare had a great run, and this is puzzling. I've got the team working on what this means, but the healthcare stocks have been in correction essentially since the end of August. But there are names out there at 7 or 8 times next year's earnings with great dividend yields. It's puzzling to see the market at 25 times earnings and a category with a superior growth rate to be so inexpensive and to still be in somewhat of a correction. That could be a great opportunity in the medical dividend space. We added it earlier back in the pandemic. Now, there's the healthcare sector. Next is the emerging markets. I want to point something out about the emerging markets. China is not emerging, yet all of the emerging market funds that were created had China as the biggest position. China's already emerged. And of course, China has their current campaign to extract capital from the wealthiest companies. And that's created this right here. So if you're going to be in the emerging markets, we like what's called the frontier markets. Basically, not China, but truly emerging. And that applies to some parts of Africa as well. So we are grateful that you tuned in. Be sure to subscribe and join us each and every week. We will also do special updates when there's fast-breaking financial news to bring it back to how to make great decisions even when the markets are under stress. I'm Spencer McGowan. Be sure to get to networthradio.com. You can download the Apple Podcast if you type in Net Worth Radio, and we'll be back next week on YouTube McGowanGroup. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowanGroup, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowanGroup Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowanGroup Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.